was there or is there noticeably more pressure on silver miners to meet the demand?
Well, look, we saw one of the miners just recently hold back some ounces, which was nice to see. For something First Majestic has done many times over the last few years, and nice to see another mining company, come to the same conclusion that sometimes it's just best to hold back some of our production, right? But we're trading in a physical market, and unfortunately we do price our metal in the paper market, and it's the paper market where the issues do occur. So when you talk about what effect this whole Reddit movement has had on the mining sector, it comes out of price. Of course, metal prices are being buoyed, I think, by this new investor, and I'm super encouraged by it because this is a whole new group of millennials that otherwise hadn't looked at this market. They were all caught up in different high tech stocks or different things that they're investing in, like GameStop and others, the Robinhood crowd and all that group. So for them to actually start focusing on this little tiny market, silver, which is a $20 billion market, I think it's fantastic. So we're seeing sales increase, physical sales increase for sure. Our website, despite the fact we're selling silver at $30 an ounce, which I'm almost embarrassed to actually be selling silver at such a premium. I'd love to be able to drop it, but the volumes of sales are coming into the website. And we're tiny, compared to some of the bigger dealers out there. Is pretty phenomenal, and I've not seen this type of volume of sales ever in the last 15 years. Well, mining companies have to sell their product. It's just like well, what would Levi's do if they just made a bunch of jeans and kept them in the warehouse? It doesn't make any sense. They have costs, they have G&A, they got employees to pay. So there is a certain percentage of metal that we have to sell just to pay our bills. So so we do holdbacks. It has to be for relatively short periods of time. It's always tough to find the right opportunity we can build one from scratch, but it's almost like a black box technology, and you really need a very skilled group of individuals that have experience in that part of the market. Well, the retail investor is the last to get access to the metal. This is a very, very tight market. Silver, depending on what stat you want to look at out there, in my opinion, has been in a deficit for well over a decade and likely 3 decades. The household silver that was just sitting in drawers, for decades, that it was accumulated by families, that's basically all gone now. So the only big hoards of silver today is really in the ETFs. And that is, unless there's some major change where all of a sudden ETFs want to start putting supply out, well, maybe the SLV might, because, that's a paper ETF versus, the PSLV, which is a physically driven ETF. But there's really no hoards out there anymore.
Why aren't we seeing silver really moving up as far as price?
Well, we have, but nothing goes straight up, and nothing happens overnight. I think that, there's probably a bit of a battle going on between the paper and physical markets right now. The banks are used to running this market. These markets are, the banks try to control them as best they can, but they are tiny little markets. And eventually, in my opinion, the physical market will take over. And it's just a matter of waking up the banks who are on the paper side of things and saying, holy cow, like our models are wrong. What our trading is wrong. We're starting to lose money on this trade. It's not working like it has worked over the last 20 or 30 years. And we got to tell our traders to change their ways of trading, change their algorithms or just get out of the market, like Scotia's got out of the market, just because the banks are losing money. I think that's where we're going to be heading. I still think, Wall Street and Bay Street, I still think they, look at silver the same way they've always looked at silver, as the poor man's gold. I actually don't even think they understand that silver is a strategic metal as I do.
Have you seen a silver shortage on the miner side where there's less silver coming out of the ground industry-wide?
Well, that has been happening. If you look at, we're a member of the Silver Institute, and peak silver was 2015. And if I remember the numbers exactly, I think it was 880 million ounces of silver produced that year. And it's gone down every single year since then. The 2020 numbers still aren't out. I've seen some preliminary numbers, of around 800 million, but I've actually seen numbers that were closer to 750 million ounces. So we've had now 4 or 5 consecutive years of mining companies producing less silver, and the consumption is, even if you said the consumption was flat, which I don't buy, with electric cars and all the different gadgets we're producing these days, solar panels and the like. These all require vast amounts of silver. So I think silver demand has been increasing while supply has been dropping. But again, this goes back to the paper market. The paper markets run by the big traders, the big banks. They don't get it, because I actually don't even think they watch the supply and demand fundamentals of the metal itself. I think all they do is stare at a computer screen all day.
If we do believe that the silver price is intentionally suppressed, how does silver ever get to that triple-digit number?
I don't know if it's actually intentionally suppressed. I think it's just managing a book. I was a trader for 6 years for 3 banks in Canada. So I know, banks don't like to take on big positions. They're risk adverse. Their clients are welcome to do what they wish, but the bank itself is not going to be taking any kind of one side of any particular trade for any length of time. So, some of this chatter out there that you see about, JP Morgan owning this or this bank shorting that, I don't really, I read it, but I don't really buy it. I think these banks are just acting for clients who are in the market. They need this physical metal for whatever they need it for. And there's a sell side to that equation where there's, people that are hedge funds or, whatever the case may be, that are willing to take the short side of that trade and expecting to deliver into that buyer, over whatever length of time they've agreed to buy. And it's all just based on, they look at 20-year, 30-year charts and see what silver has done over that period of time. And it's just, then they build algorithms, and then they just trade the market, and they're just trying to make money. They're not fighting silver, I don't think. They're not fighting copper prices. They're not fighting oil prices. They're just simply people, hedge funds, commercial people out there. They're just trying to make money. And that's what it comes down to. But I think there's a disconnect between actually what the supply and demand fundamentals of the underlying commodity is that they're trading. So I think their systems of trading are incorrect based on old fundamentals, and they haven't caught up to this new paradigm whereby silver has become the strategic metal.